Imagine looking back 20 or 30 years from now and asking one simple question: when did business really change? Many people might point to artificial intelligence or a breakthrough technology. Others might mention shifts in the global economy or changes in consumer behavior. But the real answer may be much broader than any single event. We may already be living through a corporate transformation that will influence how businesses operate for an entire generation. It's a shift in priorities, leadership, investment, and strategy that reaches nearly every industry. And unlike short-lived business trends, this one has the potential to define the corporate world for decades. One of the biggest signs of this shift is the changing definition of success. For many years, companies measured success primarily through growth. Higher revenue, more employees, new markets, larger offices. Rapid expansion was often seen as proof that a business was winning. Today, that definition has become much broader. Businesses still want to grow, but they're placing equal importance on profitability, resilience, customer loyalty, operational efficiency, and financial discipline. Leaders increasingly understand that growing quickly means very little if the business becomes fragile in the process. Another major part of this corporate shift is the rise of long-term thinking. Many executives are making decisions today that may not deliver immediate financial returns. Instead, they're investing in capabilities that strengthen the business over many years. Artificial intelligence, cybersecurity, employee development, digital infrastructure, supply chain resilience. These investments require patience, but businesses believe they will create stronger competitive advantages in the future. That represents a significant change from strategies focused primarily on short-term performance. Artificial intelligence has become one of the biggest catalysts behind this transformation. Businesses across nearly every industry are integrating AI into daily operations. Customer service teams use it to answer common questions. Finance departments automate reporting. Marketing teams analyze customer behavior. Manufacturers improve production planning. Healthcare organizations streamline administrative work. The goal isn't simply adopting new technology, it's building organizations that operate more efficiently while allowing employees to focus on work requiring creativity, judgment, and collaboration. Customer expectations are changing alongside these technological advances. Consumers expect businesses to provide fast service, personalized experiences, transparent communication, and seamless digital interactions. They compare every company to the best experience they've ever had. That means businesses can no longer rely solely on strong products. They must consistently deliver outstanding experiences throughout the entire customer journey. Organizations investing in customer trust are positioning themselves for long-term success. Another important element of this shift is operational simplicity. As businesses expand, complexity naturally increases. More software, more meetings, more approval processes, more products. Eventually, complexity begins reducing efficiency. Many successful companies are simplifying instead. They're removing unnecessary processes, reducing duplication, clarifying responsibilities, improving communication. Simpler organizations often make faster decisions and adapt more effectively to changing markets. Workforce development has become another defining priority. Technology evolves constantly, making continuous learning essential. Companies are investing in leadership development, digital skills, AI literacy, problem-solving, and communication. Rather than treating training as an occasional event, businesses are making learning an ongoing part of corporate culture. Organizations understand that adaptable employees create adaptable businesses. Financial discipline has also become central to corporate strategy. Businesses are becoming much more selective about where they invest. Rather than pursuing every opportunity, they're concentrating resources on projects that strengthen long-term competitiveness. Executives carefully evaluate investments based on sustainable value instead of short-term excitement. This approach allows companies to remain flexible while continuing to innovate. Supply chains reflect this broader transformation as well. Recent disruptions reminded businesses that efficiency alone is not enough. Companies are strengthening supplier relationships, diversifying sourcing, and improving inventory planning. The objective is to create operations capable of performing consistently under changing conditions. Reliability has become a competitive advantage in its own right. Leadership expectations have evolved dramatically. Today's executives must understand technology, financial management, workforce development, cybersecurity, customer experience, and global competition simultaneously. Strong leaders are no longer judged only by quarterly performance. They're evaluated on their ability to build organizations capable of succeeding through constant change. That requires adaptability, communication, and a willingness to rethink long-standing assumptions. Data has become another foundation of this corporate shift. Businesses generate enormous amounts of information every day. Sales performance, customer behavior, operational efficiency, financial trends, website activity. Companies that organize and analyze this information effectively gain valuable insights that improve planning and decision-making. Instead of relying only on instinct, leaders increasingly combine experience with evidence. Innovation is changing too. Rather than waiting years to introduce major breakthroughs, companies are improving continuously. They test ideas earlier, gather customer feedback more frequently, release improvements faster. This steady pace of innovation allows businesses to respond more effectively as markets evolve. Small improvements made consistently often create greater long-term value than occasional dramatic changes. Perhaps the most significant part of this corporate shift is cultural. Businesses are creating environments where learning never stops. Employees are encouraged to suggest improvements. Teams experiment responsibly. Leaders remain open to new ideas. Rather than protecting outdated systems, organizations are becoming more comfortable with continuous evolution. This culture helps businesses remain competitive even as industries continue changing. Looking ahead, there's every reason to believe this shift will continue. Artificial intelligence will become more capable. Automation will improve productivity across more industries. Customer expectations will continue rising. Digital transformation will expand. Global competition will remain intense. The companies building strong foundations today will likely be the ones leading tomorrow's economy. The corporate shift that could last a generation isn't centered on one technology or one economic event. It's a new philosophy of building businesses. Companies are focusing on resilience instead of chasing growth at any cost. They're investing in people alongside technology. They're simplifying instead of adding unnecessary complexity. They're making disciplined decisions instead of reacting to every trend. Most importantly, they're preparing for a future where continuous adaptation becomes a permanent part of doing business. Generational shifts rarely announce themselves when they begin. They're only obvious in hindsight. Years from now, business leaders may look back on this period as the moment companies fundamentally changed how they measured success, built competitive advantages, and prepared for the future. And if that happens, this corporate shift won't simply be remembered as another business trend. It will be remembered as the transformation that shaped an entire generation of business.